I think there's a high degree of uncertainty, and one has to wait until the next elections to understand whether or not there is a contagion to the rest of Europe or not. In my mind, investors should be wary about going into Europe at this stage. We've seen prices adjust significantly, and a lot of the crisis has been discounted in markets. But I think the political uncertainty currently is overbearing whether or not there is some visible sort of outcome that people can be confident of.
It's quite interesting. Over the last year, we've seen the Qatari Investment Authority, we've seen Emirati investors looking at Greece as a potential opportunity for real estate, the old airport, turning it into a real estate platform or a casino platform for other investors as well. What happens now? Do they see this as a potential bargain, or do you have to let it shake out for another 6 months to a year before foreign investors come into Greece?
Well, I think we've seen not only Greece, but Italy as well as Spain have discussions with many of the sovereign wealth funds, whether in China or in this part of the world, about investing in their economies. I think there's always a viable economic decision if asset sales are being done at the right prices for the right types of assets that are attractive enough for an investor to participate in. The contentious issue, on the other hand, is that any state assets that are sold will not necessarily improve the employment numbers for the governments that are in power. So it's a tough decision for governments to make. Sell state assets, shore up some of their budgetary deficits, but at the same time have to deal with the political consequences of those decisions.
Historically, the sovereign funds from the region and the private family groups have always decided to go to safe havens, being the dollar and U.S. treasuries or assets there in real estate, and to Europe and Euro bonds. But does this now force a rethink, and it plays into your strategy to suggest we should be looking east as sovereign funds or private family funds and tap into the Asian story or the Asian generation of growth?
Absolutely. I think we've seen a distinct shift in terms of looking at Europe and the US or developed markets post-crisis, where people thought that the readjustment would be short-term, to currently what people are looking for, which is growth. 85% of global growth in real terms is coming out of Asia. So we're looking at the only economies that are growing and the only economies that have some form of a stable fundamentals that allow it to apply any fiscal or monetary tools they need to help the growth continue. So the KIA, for example,
which is the Investment Authority of Kuwait.
Investment Authority of Kuwait. One of its only external offices was recently opened in Beijing. So that does signal a trending east, and I'm sure that both the ADIAs of the world and the KIAs, as well as some of the sovereigns in Asia themselves, are refocusing their energies and finding opportunities in Asia.
Could we have a break, though, in this strategy? We've seen commodity prices come down 15% for oil, for example, since the start of the year, from their peaks. Could this all go out the door if China goes down because of Europe and the United States and its slow recovery, and people have to readjust the fact that we don't have strong commodity demand over the next 5 years?
Sure. Look, we're forgetting a big economic bloc that I think isn't as bad as Europe, which is the US. The US is quite a resilient economy. It used to be one of the larger demands for commodities. And I think growth, we're seeing inklings of growth back in the US economy. So I think, yes, Europe as an economic bloc is going into recession, as we've seen with yesterday's numbers. However, I think the Asian economies themselves are readjusting to inter-Asian trade. We may not see the same growth rates of pre-crisis or pre-global financial crisis, but I think we'll start to slowly see a troughing of growth with hopefully some sustainable continued growth within Asia.